Hi, everyone. I'm Ivan Biuki, and welcome back to Wall Street Silver. Joining us today is Mark Yaxley. He is a managing director at Strategic Wealth Preservation. Mark, thanks for joining us, sir.
Ivan, Jim, good to see you both. Glad to be here.
Yes, glad to have you with us. Thank you for taking the time for joining us.
Not a problem.
So Mark, your business is all around buying and selling for your clients, gold and silver. So the first thing we wanted to ask is your take on what's moving the market these days in gold and silver. Where are you seeing the most demand? Are your clients, you have your finger right on the market in terms of dealing with really large clients. What are you hearing? Where are they going right now?
I think the major concern right now, aside from Russia and Ukraine, which we'll come back to, which is kind of the most current event that is fueling some of the safe haven buying that we're seeing right now. The consistent theme over the last 3 to 6 months has really been the inflation concerns. And more importantly, the Fed's reaction to inflation. They've already announced that they're going to be tapering back their buying programs, which AKA just means less stimulus for the economy. And they're going to be raising interest rates. And both of those things are very likely going to be negative for the stock markets. I'm personally expecting a fairly severe correction in the markets in the coming months. We've already started to see that, a clear trend since December. The stock market's really struggling to reach new highs. In fact, it's dropping 2 to 3% in some cases per day. Mm-hmm. And that's good for gold. People are nervous about their positions in the markets. They're repositioning themselves. They're hedging their bets. And so it's kind of the traditional safe haven buying for gold as well. Gold and silver, obviously, following that trend. So good to see.
That takes me to, why is the market struggling? And I saw this chart the other day, and it really jumped out at me. It was really popular when I posted it. A guy named, just to give this guy credit, Fading Rallies. He was the one who came up with it. And it shows that liquidity is really just falling off a cliff, even though the Fed is technically still buying. And I think that leads into why the market's struggling right now, even though we'll see what happens when they completely stop buying bonds and the taper is complete. But it shows you liquidity is a real issue in the market right now, mm-hmm. and causing people a lot of concerns.
Yeah, I think more sophisticated investors, people that watch the markets closely, that watch financial news and can make sense of this, which may not be the mainstream investor. Unfortunately, they tend to take a hit in these kind of situations, but the people that are paying attention are well aware of the consequences of Fed ending stimulus and interest rate hikes. So they're getting ahead of the curve, and I would expect that trend to continue even more sharply once the bond tapering programs or the bond tapering takes effect and interest rate hikes start, which it sounds like as of this morning, they were talking as early as March for the first rate hike. And by July, a full 1% hike, which, that's the very near future. So people need to be ready now.
So what's your take on that? Do you think the Fed can actually do that without the markets completely falling apart? And let's say the markets fall 30%, I'm just throwing out a hypothetical number. Does the Fed have the courage, do you think, to keep going?
I don't think they have a choice. I think they've backed themselves into a corner where they've really got limited options. Inflation's running at 7.5% year over year. That's up 0.3% since last month. There's a lot of political pressure on the Fed to control inflation rates, even though they come out and they say, oh, the economy is doing great, but inflation's out of control as a result. And that hurts everyone. Inflation hurts the rich, it hurts the poor, it hurts the poor most, but it hurts everyone. So there's going to be a lot of political pressure on them to control those inflation rates. And therefore, they don't have a choice. And so whether they want to, I'm sure they don't want to harm the stock market. I'm sure there's going to be some pushback there, but I don't think they really have a choice at this point in time. So it's kind of inevitable.
But don't you think, let's say mortgage rates get up to 4 or 5, 6% even. Mm-hmm. The housing market's just toast at that point. People just are not prepared for normalized interest rates. I almost think the pressure, and I'm not trying to put words in your mouth. This is me, I'm an opinionated guy. I'm going to talk about my opinions too. But I almost think the sentiment would change after a market collapse like that, where then the pressure is no longer inflation.
It's all about volatility. It's all about the pendulum swinging too far, and the pendulum has swung way too far in this case.
Yeah.
to the point where we have 7.5%, inflation. So the Fed failed in fact, in part of their mandate to control inflation while still growing the economy, while reducing unemployment. They failed there. They don't say it in those terms, but if you listen to the minutes, that's more or less what they're admitting to.
Mm-hmm.
And then, so now they're going to take corrective actions. So the same people that caused this situation are now going to take the corrective
Mm-hmm.
actions to try to fix it. They're probably going to go too far. The pendulum will swing too far back. Stock market will crash 30-40%. Housing market will struggle. And then they'll say, oh man, what do we do now?
10 trillion.
Pendulum swings the other way. But this is what happens when you have human intervention and you have government intervention trying to control the markets. This is what happens. They don't have, it's not a perfect science. And yet they speak about it in a way that it is a perfect science, that they have the tools and they have the controls in place, but they obviously don't, because if they did, we wouldn't find ourselves in this situation we find ourselves today.
Well, the other big piece of news out there we wanted to talk to you about is Russia. Russia-Ukraine is on everyone's mind. It seems like gold and silver, if the Secretary of State says he's going to be meeting with his counterpart from Russia to talk about it, then boom, all of a sudden the market goes up 200 points, the Dow goes up, the NASDAQ goes up, and then gold and silver drop. But then if it looks like they're going to war, exactly the inverse happens. Markets collapse and gold and silver go up. I mean, is this really driving it? Just this yo-yo yanking us around right now this week?
Definitely in the last 2 weeks. I mean, before that, it was really focused on, like we've talked about already, on the inflation and the rate hikes. And that, gave a nice, bunch of momentum to gold and silver to move out of that 1750 range, moved into like the low 1800s for gold. And then silver broke through $23 finally. So there was already a little bit of momentum there. Then you had the China housing crisis, which, let's not forget that's still a potentially massive global financial issue that will come to light at some point in time. But the Russia-Ukraine headline is obviously top of mind right now. And like you said, we've never lived in a day and age where news travels so fast and the markets react so quickly, depending on who's saying what about the war or the potential conflict. I think it's too early, because we don't know if this is going to be a war. But I will say, historically speaking, there is no more important driver for gold and silver prices than war. If there is actually an invasion in Ukraine, I would say the price of gold could quickly go to $2,100, quickly, within weeks, go to $2,100, and silver could be up near 30 in the same amount of time.
I mean, no, I don't think anyone's hoping for it. And Lord, Ukraine's not even in part of NATO, so we don't even have any real obligations there. And frankly, Russia and Ukraine, they're very close. I mean, I just have a hard time believing Russia's gonna go devastate Kiev. I mean, it's like there's so much history, and good history between those two countries. They have some border skirmishes over some Russian area, but I don't think. I mean, they were both in the Soviet Union together for many decades. It's not like these people don't know each other. I have a hard time believing there's going to be a real war there, and it seems like Washington's pushing it for it more than anyone else. It seems like to me. Just my amateur observation.
I think the most likely outcome is probably like a political standoff, kind of like the old Cold War days, or the more recently kind of like the standoffs with North Korea, where North Korea will use threats as a way to negotiate, whether it be about NATO or whether it be about funding or whether it be about giving back some privileges on a political level to Russia. But it seems like Putin has really made a point of stating how important Ukraine is to his strategy and his legacy. So whether he's willing to go to war over that legacy, we will see. But it does sound to me too, when I listen to Biden speak or some of the people in Washington speak, it sounds like the US is trying to stoke the fire a little bit. And I'm not quite sure why at this point. I don't know what the appetite is like in the US for war, but I know in Germany and Canada and other NATO participants, it's not very high.
Just to put this on the map for everyone, here's Ukraine, and I don't know if you can see the border lines here. Here's Russia up here, and here's generally where NATO is. Poland, this is right along here. And Putin and Russia's concern is they don't want Ukraine, and the current government of Ukraine is very EU friendly. They don't want Ukraine to become part of NATO, because then NATO would be right on the border of Russia and not too far from Moscow. And if Ukraine became part of NATO, then the NATO could conceivably put a lot of bases and missile systems much closer to Russia. I think that's the concern Putin's having. And he already has Belarus. Belarus is in Russia's back pocket. So right now, the closest that any of the missile systems are, I think, is in Poland, really. Poland is a very strong ally of NATO, is part of NATO. And I believe also these three countries, Estonia, Latvia, and Lithuania, have already become part of the EU. So there's a concern. Putin just feels that everything's getting closer and closer to Moscow, and he doesn't want NATO so close. You think that's part of this fear? He just wants to draw a line in the sand for Ukraine, that he's not going to let that become part of NATO?
I think from a strategy point of view, yes. But it's already been made clear that there's no intention in adding the Ukraine to NATO, even though their current government would probably like to be a participant in NATO. It sounds like, in listening to some other commentary about Russia, that Putin feels very strongly that losing Ukraine as part of the fallout of the USSR was a major, major error on their behalf. They've got some major ports in the south of Ukraine and the Black Sea. So that's, economically, it's very strategically important to the area as well.
Yeah.
And yeah, like you said, the government in place in Ukraine right now is pro-EU, and I'm sure he'd like to see a government that's a little bit more pro-Russia.
Well, right, these border areas of the Ukraine, on the Ukrainian side of the border, actually have tons of Russian-speaking people. They feel like they're Russia. And Crimea down here was like 90% Russians, even though it is technically still part of Ukraine, but now it's part of Russia since, I don't know, it was 2015, I think it was.
Yeah.
When Russia annexed it. But and Russia has also supported some separatist Russian groups right here along the border. So it's a complicated situation. And I think the media in the United States is not really explaining it well, everything going on there. What items are you seeing your clients? And your clients buy tons of gold and silver. You deal with some really wealthy people. What are they favoring the most right now? What has the most reasonable premiums out there, do you see?
Yeah, I think it's important to start with what's not reasonably priced. And although I'm wearing my Royal Canadian Mint t-shirt today for you guys, I thought I'd pull that out of the closet. Silver maple leafs are one product that are running hot in terms of premium right now. It's not priced at a point where I would necessarily recommend that for most retail investors. The same is true with the Silver Eagles, even worse. I mean, Silver Eagles, it's kind of been ridiculous, really. Even I remember the last time we spoke, Jim, we were having the same talk about Silver Eagles. They've never come down in like the last 6 months and even going back a year or so. So I would say the Silver Eagles and Maples, which are still best-selling products generally for the global market, we're not recommending those as a first choice to our clients. Right now, we talked pre-show about some of the secondary sovereign mints, the Philharmonics, the British coins. You mentioned the Krugerrands. There's some good value there because you're still getting the sovereign mint names and the resellability and the resale value of those coins, and you're paying a lower premium, which is more in line with what their regular premiums would be. And so I think that's good value. And of course, you always have the larger bars. Whenever we have a client that can afford a 100-ounce silver bar or 1,000-ounce silver bar or kilo gold bars or at least 10-ounce gold bars, we will put those into the quote so that they have a chance to look at those lower premiums and take advantage. And really, my mentor always told me, he says, like, save on premiums and you get more gold or silver for your money. Effectively, you buy more ounces. And that's really the key, especially when you think there's going to be a run up in the market. You really want to try to accumulate as many ounces as possible because there's going to be a chance to take some profit if you get a major run, not sell all of it, but take some profit. And then you want to have paid the lowest premiums possible up front. Yeah.
There is one other coin I wanted to share with you. It's a new one from the Royal Mint of the UK. It's the Prince Andrew commemorative coin. And man, I'd buy the heck out of this if I could find it. I think that's hilarious.
Yeah,
I think someone should mint that coin. I think it's worth a run of a few thousand for sure. And I'm sure the Queen,
obviously this is fake.
Made that face.
We're just playing around, but the Queen's reaction to Prince Andrew, I thought, was just precious and, for a precious metal coin. And anyways, I just want to put that up as an idea for anyone to consider for sovereign mint coins, even though it's not actually an official coin. It should be. But hey, Mark, thanks for joining us. We really appreciate it. The audience appreciates you. And let's do it again later this year.
Same thing, guys. Keep up the good work. Love seeing your numbers going up, seeing your names all over the internet and Twitter. And it's really great to see you guys educating people and sharing information about our industry. So thanks for what you do.
Have a
Thank you,
good
Mark.
one.